What is going on, everyone? Welcome back to the Daily Stock Drop, your number one source for the latest market moves and the news you actually need to know. If you're holding SoFi Technologies or if you've been watching it bleed out on your watch list, wondering if it's time to buy the dip, today is the day you've been waiting for. We just got a massive upgrade from a major analyst, and they're calling for a potential 40% upside from where we are right now. Is SoFi finally ready to rocket back to $30? Let's dive into the charts and the report. But first, a quick disclaimer. I am not a financial advisor. I'm just a guy on the internet talking about stocks. The stock market is risky and you can lose money. Everything in this video is for entertainment purposes only. Always do your own research or consult a certified professional before making any investment decisions. All right, let's get into the meat of it. So, the big news dropping today comes from a fresh note out of Citizens JMP. Analyst Devin Ryan has officially upgraded SoFi's stock from market perform to market outperform. And the number everyone is talking about, he slapped a $30 price target on the stock. Now, depending on when you're watching this, SoFi has been hovering around that $21 mark. So if Devin Ryan is right, we are looking at a massive 40% gain from current levels. So why the sudden optimism? Because let's be honest, the stock has taken a beating recently, down about 20% year to date. Well, according to the Citizens report, this sell-off is a mistake. Ryan argues that the market has been punishing high-growth stocks because of fear and technical factors, not because SoFi's business is actually struggling. Basically, he's saying the baby got thrown out with the bathwater. Here is the core thesis for investors. First, scale. Ryan highlighted that SoFi is proving it can compound at scale. They are adding members and new products rapidly, but more importantly, they are getting better at monetizing those users. Second, diversification. SoFi isn't just a lending bank anymore. They are moving heavily into fee-based and capital-light revenue streams. For investors, this is huge because it means less risk on the balance sheet and more consistent cash flow. But here is the kicker, and this is my favorite part of the report. The analyst talked about something called under-modeled optionality. Under-modeled optionality. That is fancy Wall Street talk for there is secret value here that the market is ignoring. Ryan specifically pointed to SoFi's investments in blockchain, artificial intelligence, and their new loan platform products. He believes these sectors are going to drive growth that isn't even priced into the stock yet. So, what does this mean for you as an investor? If you believe the Citizens' thesis, the current price of roughly $21 is a gift. The market is worried about the macroeconomy, but SoFi is heads down building a diversified fintech monster. However, remember that analyst price targets are just predictions, not guarantees. But when you see a firm upgrading a stock during a downturn, suggesting a 40% upside based on fundamentals like AI and efficient scaling, that is definitely something to pay attention to. But I want to know what you think. Is SoFi a trap, or is this the golden ticket to $30? Let me know your price targets in the comments down below. If you got value out of this update, smash that like button. It really helps the channel. And hit subscribe so you never miss a daily drop. I'll catch you in the next one.